It's Thursday, the 26th of August, 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Sean Aylmer. The two market leaders in the buy now, pay later space announced disappointing results, raising questions about the sector. That's our main story. Also coming up in today's podcast, a COVID vaccine passport proposal to go to National Cabinet this week. One of Australia's corporate leaders, Kerry Stokes, retires after 60 years of battles, and how to make $2.75 billion in just 90 minutes. Then stay listening for my chat about how Australia is missing great leadership and great political speeches. But first, here's a brief look at markets. Wall Street was generally higher overnight. The tech-heavy Nasdaq was up 0.1%, while the Dow Jones Industrial Average and S&P 500 were both 0.3% higher in early afternoon trading. London's FTSE was up 0.3% as well, while the Stoxx Europe 600 was flat. The S&P ASX 200 closed up 0.4% yesterday to finish at 7,532 points. Technology and materials companies led the way, while telcos were the worst performers. The bounce back in iron ore prices certainly helped the big miners. Rio Tinto and Fortescue Metals both rose 2.6% yesterday, while BHP was up 1.3%. Woolworths and Coles fell more than 1%. Telstra went ex-dividend yesterday and finished down 2.6%. Ex-dividend means anyone buying the share yesterday, today, tomorrow or beyond won't get the dividend announced in Telstra's results 2 weeks ago. Qantas's share price rose more than 5% yesterday, taking the 3-day jump to more than 14%. If the vaccination rollout continues at the current clip, flights around the country are likely to resume in coming months. That helps the share price, of course. Other stocks that have done well in recent sessions include Flight Centre and Webjet. Oil prices are up by more than 1% overnight, continuing their recovery. That's not going to help local petrol prices, which are pretty high at the moment. The price of gold fell back a bit, and the Aussie dollar is trading at 72.8 US cents. Few startup sectors have been hotter in the past couple of years than the buy now, pay later players. But earnings yesterday from the big two in Australia show that neither are making money, as they spend huge amounts on marketing their services to gain both customers and merchants. And there are some signs that bad debts are starting to rise, another risk for the sector. Market leader Afterpay said marketing and staff expenses surged over the last financial year, and losses from bad debts were higher as it took on riskier customers. It meant the Buy Now, Pay Later group's bottom line was much worse, with the group losing $159 million, notwithstanding the platform handled $21 billion in sales, not far off twice the level of the previous year, and it has 16 million customers. Afterpay is in the process of being acquired by US payments giant Square for $39 billion. As a result, its share price has something of a flaw, and it dropped a little over 1% yesterday. Australia's second largest Buy Now, Pay Later group, Zipco, reported a drop in earnings, even though it recorded big jumps in transaction volumes, customer numbers, and top-line revenues. The surprising loss sent its share price tumbling and reflected big spending on global expansion via its subsidiary QuadPay in the US. QuadPay is spending marketing dollars to keep up with competitors Afterpay, Klarna, and Affirm. Zipco handled $5.7 billion through its platform and has 7.3 million customers. Startups, and particularly tech startups, aren't supposed to make money. Or more correctly, what they make, plus more, is reinvested to build the business. But there's no sure thing in startup world, including in the buy now, pay later space. There's plenty of competition in the sector, regulators are looking more closely at it, and hardly any of them are turning a profit. For Afterpay and Zipco, the future is in the US market where customer numbers are surging. But as I said, there's no sure thing in investing. Buyers beware. In a moment, the rest of the news you need to know this morning. In overseas news, Delta Airlines will charge unvaccinated employees $200 a month extra to be part of its health plan. In the US, the majority of workers with private health insurance access it through their workplaces, and the Delta announcement is part of an effort to convince Americans to get inoculated. Some employers, including American Airlines and rail group Amtrak, have already mandated vaccinations. US President Joe Biden said he will stick to his plans to withdraw all troops from Afghanistan by the end of this month, despite pressure from European allies to remain. About 70,000 foreign nationals and Afghans have fled the country over the past fortnight as the Taliban took control. Japan and Taiwan will hold their first bilateral security talks tomorrow in an effort to counter the aggressive stance by China. It comes as US Vice President Kamala Harris, while visiting the region this week, castigated China for its threatening behaviour towards its neighbours. And Canada's Prime Minister Justin Trudeau, who's seeking re-election, said he would impose a 3% surcharge on Canada's large banks and insurers if successful at the poll. He said they'd posted extraordinarily large profits through the pandemic when everyone else had to tighten their belts and should do more. Locally, a proposal for vaccine passports, which would allow fully inoculated people greater freedoms, including access to restaurants, bars, sports concerts and travel, will be presented to National Cabinet tomorrow, according to media reports. The passports, which would be stored digitally, would operate similarly to those used in Europe. While not all states have signed on yet, business and community organisations are already supportive, Victorian Health Minister Martin Foley said. It came as New South Wales recorded 919 new COVID cases yesterday, a new high, and reported 2 deaths, including a woman in her 30s. The state has now recorded almost 5,500 cases in the past week. Health Minister Brad Hazzard said hospitals were coping, comparing the workload to a very bad flu season. Meanwhile, the state Premier Gladys Berejiklian said the government will push ahead with easing restrictions for fully vaccinated people next month. She said the vaccination rate, not the number of daily cases, was the most important figure to focus on from here. Victoria recorded 45 new cases of COVID yesterday, the third day of declining numbers. There were 9 new cases in the ACT and its lockdown will remain until at least the end of the week. And New Zealand reported 63 new community cases, and the rise in numbers in recent days triggered a hard border with Western Australia. The good news is that Queensland reported no new cases, and the 2 announced yesterday turned out to be false positives. Vaccination numbers are good and getting better. There were 307,000 jabs administered across the country yesterday, taking the total shots to 17.7 million. Vaccination rates for aged care residents and staff, some of the most needy in the economy, are more than 88%. National Australia Bank boss Ross McEwen has suggested Melbourne Cup Day could become Freedom Day if vaccination rates continue to rise. November 2, the day of the Cup, is around when Australia is expected to hit a vaccination rate of 70%. Mr McEwen also raised the idea of mandating jabs for bank staff. Almost 1,000 people were evacuated from Kabul in 5 Australian flights yesterday, taking the total number to 2,650 from 22 missions, the Prime Minister said. There's a mix of Australians and Afghan nationals, and Mr Morrison said all would be welcome. ANZ has lifted its Sydney house price growth forecast by 4 percentage points to 23% this calendar year, and it expects prices to keep rising for the next 2 years, albeit at a slower pace. Canberra will be the best performing capital city with price rises of 24%. Hobart prices will jump 23%, according to the bank. ANZ expects Brisbane house prices to rise 21%, Melbourne by 20%, and Darwin by 19%. Pretty good. Kerry Stokes is among Australia's most successful business leaders, alongside the likes of Rupert Murdoch, Kerry Packer, and Andrew Forrest. The 80-year-old billionaire chair of Seven Group will retire in November, though he will remain an advisor, and dare I say, a very influential one. The announcement came as Seven said it had lifted core revenue and profit. Seven has interests in Seven Media, Coates Hire, Westrack, and recently purchased 70% of Boral. Nine Entertainment boss Mike Sneesby said conditions remain challenging as the group continues its push into digital services. Nine made $184 million last financial year compared to a $574 million loss the previous year, and declared its biggest dividend in 5 years. While the television and publishing businesses had rebounded, the radio arm, which includes 3AW in Melbourne and 2GB in Sydney, had struggled. And analysts were wary about higher costs for its television division and for sport on its streaming service Stan. Nine's share price fell almost 10% yesterday. It was a wild ride for the shareholders in WiseTech, the listed logistics business. Yesterday, its share price jumped more than 50% in about 90 minutes after the opening of the bourse, triggering a halt in its trading. WiseTech had earlier announced an 18% jump in revenue and a 33% drop in profit. Both were better than expected, but certainly not enough to trigger such a surge in its share price. Company founder Richard White owns 40% of the stock, and in about 90 minutes, his wealth increased by $2.75 billion. When asked by the ASX, the company said it knew of no reason for the massive jump and it was allowed to trade again. It dropped back, but by the end of the day finished up more than 28%. There's certainly something going on there. Australia's second largest gold digger, Northern Star, said it was on track to produce 2 million ounces annually by 2027. The group, which merged with Saracen 6 months ago, reported a quadrupling of net profit to more than $1 billion. Cash earnings, which are a better representation of performance, were up 10%. Northern Star's share price has fallen 25% this year, alongside a lower price of gold. Yesterday, its share price was down 0.4%. Lithium producer Orocobre reported a loss last financial year and will rename itself Allchem after it merges with Galaxy Resources. A tax rate change in Argentina triggered the loss, and total production of lithium was up over the year. The new merged group will become the world's 5th most valuable producer of lithium, which is used in batteries, and have operations in Australia, Argentina, Canada and Japan. Orocobre's share price rose almost 4% yesterday. Travel and transport group Sealink Travel announced a $37 million net profit last financial year, which was pretty remarkable given what's happened to the tourism industry. The owner of Captain Cook Cruises in Sydney Harbour and ferry services in South Australia and Queensland, immediately prior to the pandemic, purchased a commuter bus business. It runs 3,800 buses in Sydney, Melbourne, Adelaide, Perth, Singapore and Britain, which saved the business. Timing is everything. As always this time of the year, there were many earnings results around yesterday. Infrastructure group APA reported a decline in underlying profit. Engineering leader Worley said its profit had halved on the back of lower consumer spending on energy and restricted access to work sites. Fashion jeweller Lovisa said sales were up sharply, triggering a 12% jump in its share price. Universal Stores almost doubled net profit last year. Silk Laser Clinic said sales had tumbled because of lockdowns. Well, it would be pretty hard to receive laser treatment over Zoom, I'd imagine. Insurer Medibank said its profit had risen while IDP Education suffered as a result of the loss of international students. Up next is a daily interview. My guest is James Curran, a professor of modern history at the University of Sydney, and we're asking the question, why haven't any of our politicians seized the opportunity to show strong leadership during the COVID crisis? Paul Keating did it with reconciliation, just as John Howard did with gun control. Often it needs a speech capable of uniting the country, something we're yet to see during the pandemic. It's a fascinating conversation. That's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. It's Thursday, the 26th of August, 2021. I'm Sean Aylmer, and that was Fear and Greed. Enjoy your day.